Welcome guys. Today we'll do detailed question by question analysis of Code 17 management paper of UGC NET for the June 2021 attempt. This paper was conducted on 30th of November 2021. So we'll do the detailed question by question analysis. Before we start with that, we'll share three things with you. Number one, so this video is on paper analysis question by question, but if you want to get oral analysis of the paper and understand the things like trend of cutoff, difficulty level, what is weightage of different topics in the paper, what we can learn from 2021, how to prepare for 2022. So if you want to get that oral macro picture, then there is another video on the YouTube. We also have given link to that video in the description below. Second thing, then there is another link given in the description below. That link is to understand how you can prepare with Human Peritus for Code 17 management paper. Click on that link. It will take you to Human Peritus website. Go to Code 17 management page. Look at some of the demo classes to understand how we teach you in these live classes. Look at sample content. You can also go through interviews and experiences of some of the other candidates, understand how they have done it. So that link is also given in the description below. Then there is a third link. So guys, anything on your mind, anything which you want to discuss with us, you want to ask us, you want to share with us, you want to agree with us, you want to disagree with us, there is a third link given below. That link will connect you directly with our team via WhatsApp. Click on that, get connected, and feel free to share anything which you feel like. So let's get started. So this is the first question. It is from the topic of operations management. The topic is queuing theory. So if you look at these terms on the left hand side, so queue discipline is what? So queue discipline is the order in which people are coming and joining the queue, like FCFS, CIRO, first come first serve, last come first serve, etc. So waiting time system is waiting time in the system is what? That whatever time are people spending in the queue as well as the time when they are being served. So this goes with 4. Then Markov property is what? That when time of next event is influenced by the time of previous event. So A goes with the second, and of course the remaining option C, it will go with the third, and therefore our correct answer is this one, which is option C. Next one. So it is from capital budgeting. It says which method of risk analysis better serves the lender's perspective in the capital budgeting method. So if you look at these different methods, as you know, capital budgeting, we discount cash flows. So one method is discounting of cash flows. Now there is another method to accommodate for risk in case of capital budgeting, which is known as certainty equivalent approach. What is meaning of certainty equivalent? It means guaranteed return, guaranteed return. So guys, what we do, whatever cash flows we are getting, we scale them down based on the risk. For example, if my cash flow, if a given cash flow is there, so I scale them down with a factor of risk premium. Okay, so this risk premium comes from where? This is the difference between risk adjusted rate of return minus risk-free rate. So we scale down every cash flow, and then we calculate our NPV, and we make a decision whether to select a project or not. So this is this method is suitable from lender's perspective. Why? Because lender is being protected of for his returns. We are scaling down the cash flows based on the expected risk in the project, and this approach is known as certainty equivalent approach. Next one we have to understand what are the features of Poinsot distribution. And so guys, what is Poinsot distribution? Poinsot distribution is what? That probability of occurrence is given in a given space or a given time or a given volume, and we see that what is probability of occurrence of a given event. A very famous example is your people coming and joining a queue. For example, if I see that how many people are joining a queue in a given window of 3 minutes. So now there are various properties of Poisson distribution, like for example, the probability will be same, you take any interval of 3 minutes. Second one is that probability of any given 3 minutes is independent of probability of any other window or any other bracket of 3 minutes. Third one is that probability will approach to 0 as this window of time is reduced from 3 minutes. If you go 3 minutes, 2 minutes, 1 minute, so on, the probability of occurrence will tend to become 0. So again, these assumptions are given. So only thing which you have to note is that it is given that Poisson distribution describes continuous occurrence or a specific time interval. Please note that Poisson distribution is not continuous, but it's a discrete kind of distribution. So which is other discrete kind? For example, binomial is also a discrete kind of distribution. Now there are two discrete, which are binomial and Poisson. Now similarly, there are two types of continuous distribution which we study, which are what? They are our normal distribution and exponential distribution. Therefore, C is incorrect, and our correct answer should be A, B, and D, and therefore this is the correct options. So guys, these three questions which we have done till now, everybody should be knowing them. They are, we will not say that all these three questions which we have done till now, they are difficult questions. If you are studying seriously, you should be knowing these three questions. Let's move on to fourth one now. Fourth one is on Walter model on calculating the value of a firm. So guys, what is formula of Walter model? D by K plus R by K into D minus not D, rather E minus D. What is E? E is for earning per share. K. So I'll tell you what each of them is. K is cost of capital. D is your dividend per share. So R is internal rate of growth. E is the earning per share. And now we know everything. So it says the market value of a growing firm. So when it's a growing firm, it means your R by K will become greater than 1. If R by K will become greater than 1, so this D, which one? This D will become larger in magnitude in comparison to this D, because it's a negative sign is given. So when the dividend payout ratio is increased, the overall value will go down, because eventually it will give us some sort of minus D. Why it will give us minus D? Because this value is greater than 1. Therefore, the correct answer is C, which is decrease. Let's move on. Next one. Next one is what? It's again it's a model based on a dividend theory, which is known as Graham and Dodd model. And so according to this model, there is a formula which has been given, and that formula is what? That the value is given by M into D plus E by 3. Again, D is what? Dividend per share. E is what? EPS, earning per share, and M is a multiplier. And so let us see what all has been given to us. So guys, the price is given to us, which is 44 rupees, and earning per share is also given to us, which is 3.75. Now D is not given to us, but since my EPS is what? EPS is my 3.75, and it is given that my retention ratio is 60%. Because retention ratio is 60%, so dividend ratio will become what? 40%. So my dividend will become 40% of 3.75, which comes out to be 1.40. So now I have got all my values, and I can calculate my M from here by putting these values, and your M will come out to be around 16.6, and therefore my correct answer is B, which says answer is 16. Cool. Again, both these questions has Walter model, as well as this model is also given in every book. So not a difficult question, both of them. Next one. Next one is what? The relationship between an investor expectation of a return with respect to the relationship between investor expected rate of return on bonds with respect to investment horizon is known as what? So guys, this is known as term structure of interest rate. So term structure of interest rate क्या होता है? So basically we plot a interest rate on the y-axis and time to maturity of bond on the x-axis, and then we calculate this, we see how this graph is going as my time is increasing of bond from 5-year, 10-year, and all those, and how this graph comes, guys, how this value comes. So this is nothing but your nominal rate of interest. So इस graph में क्या क्या होगा on this line? So it will have some real rate of interest plus what? It will have inflation premium plus it will have interest rate risk premium and so on. So this is how you get this line, and this is known as term structure of interest rate. So correct answer is C. Again, easy question. I won't say, see, again what I'm trying to do, I'm trying to bucket every question in two categories. Number one, कि अगर तुमने पढ़ाई किया है कि जो तुम्हें आना चाहिए था. Number two, ठीक है, वो एक मुश्किल सवाल है, शायद पढ़ाई करने के बाद भी नहीं आता. So till now every question which you have done, वो तुम्हें, अगर तुम seriously तुमने पढ़ाई किया है तो वो तुम्हें आना चाहिए था. Next one. Which of the following is the logical timeline of dividend payment? So what are the steps in dividend payment? So probably some of you might not know it. This is not given in every book. But इसमें एक interesting बात ये है कि again सारा dividend की story में final step क्या होगा कि जब when you will actually be paying that dividend, right? So payment date is the last step and which is given in one option only, which is option D. So correct answer is D, because finally when dividend is being paid, that is the payment date. Before that there are a couple of steps like you tell stock exchange, you declare a date, dividend rate, you ex-dividend date you tell, and all those things. But finally D. But yes, some of you might not have done this question. That is okay. Okay, next one. An outlier doesn't affect which of the following statistical measures? Correct answer is quartile range and median. So guys, ऐसा क्यों होता है? So for example, what is a median? So if you arrange all values in a line and you find the middlemost value, that is your median. For example, if I say 3, 4, 6, 9, 10, इसका median क्या होगा? इसका median बीच वाला होगा, which is 6. Correct? So अगर हम outlier की value को हम change कर दें, अगर हम 10 की बजाय हम इसको 15 कर दें, क्या हमारा median change होगा? नहीं होगा. Still it will remain 6 only. This is the reason why median is one of the correct answers. So what is quartile range? So guys, what we do in case of quartile range? So we arrange all our data points in 4 parts. In 4 parts, 1, 2, 3, and 4. Okay. So this point is known as Q1, this point is known as Q2, this point is known as Q3, and finally it is nothing but Q4. This is Q0. So what is quartile range? By the way, this is nothing but median. Q2 is nothing but median only, beach all option, right? So quartile range is the difference between Q1 and Q3. Again, outlier में अगर हम कुछ change करेंगे, this will not change. Therefore, quartile range is another correct answer. And standard deviation or regression coefficients, they depend on every value, and therefore they will get affected because of an outlier. Correct answer is A and C, and A and C is given in the option B, and therefore correct answer is option B. आगे बढ़ते हैं. So again, I mean, I won't say like an easy question, but I mean, if you understand the conceptually the concept behind it, then you should be able to do it. Okay. Next is what? It is the portfolio theory. So guys, portfolio theory is what? It is nothing but modern portfolio theory, MPT, and it was given by a gentleman named Harry Markowitz, and he also got a Nobel Prize for this theory. So there are a couple of assumptions of this theory, that investors are risk averse. They want to maximize return with the minimum risk. Your risk is measured by variance or standard deviation. Your returns are normally distributed, and another assumption is that whatever information come, it will automatically get absorbed, and therefore markets are markets are efficient. So in this this question, our correct answer is C, which is B, C, and D. And as you can say that risk averse and the price is same for all investors. They are normally distributed. In fact, this normally distributed is nothing but this normative approach only, if you can figure it out. So these two assumptions are not there, A and E, and therefore correct answer is our C. Next one. What is finite population multiplier and when it is expected to be 1? So guys, what do we know? We know that our standard deviation of sampling distribution is given by what? Standard deviation of population by अंडर रूट ऑफ सैंपल साइज, ठीक है. लेकिन ये वाला जो फॉर्मूला है, ये वाला फॉर्मूला कब काम करता है? जब हमारी पॉपुलेशन इनफाइनाइट हो. अगर पॉपुलेशन हमारी फाइनाइट है तो हमारा जो फॉर्मूला है दैट बिकम्स व्हाट? सो n minus 1 into this. So this is known as finite population correction factor. So ये वाला फॉर्मूला कब होगा हमारा? When it is finite. Now there is a third case. Third case is what? कि अगर finite है and your ratio of n by n is less than equal to 0.5, तब भी हमारा ये वाला फॉर्मूला ही काम करेगा. So in this case again we assume that this value is nothing but 1. So n by n less than equal to 0.05, not 0.5 but 0.05. It means what? Your n will become greater than equal to n by 0.05. So your n will become greater than 20n, and therefore correct answer is A. Done. Next one. The term flexible manufacturing technology or lean production का क्या मतलब? Again, lean production is a very broad concept in topic of quality management. इसमें काफी चीजें आते हैं जैसे कि TPM, quick setup, Kanban, quality at source, cellular layout, smaller lots, flexible resources. आप इसमें से देख सकते हो. Again, लेकिन आप इसको देखो भी अगर आपने क्वालिटी मैनेजमेंट थोड़ा सा भी पढ़ा है, so all of them will improve the process, except this thing that we do not do quality management just to be compliant with government regulations. So it was pretty obvious that A cannot be your answer. Correct answer is B, C, and D, and therefore option D is correct. Again, quite easy one, and also you can also do with some sort of common sense. आगे बढ़ते हैं. A transportation problem becomes transshipment problem when? So guys, transportation problem क्या है कि हमारे कुछ we have got some origin points and some destination points. So transportation problem क्या था? We try to find the minimum cost to take from points of origin to points of destination. So transshipment क्या है? So origin से destination भी जा सकता है, destination से origin भी आ सकता है. Therefore, in this case, your sources, so if they are M origin and N destination, so transshipment is a special case of transportation problem क्योंकि origin से destination जा सकता है, destination से origin भी आ सकता है. So your sources will become M plus N and your destination will also become M plus 1, M plus N, and therefore correct answer will become your A. Next one. So which of the following is true with regard to least square method? Again, quite easy one. Regression coefficient में हम लोग पढ़ते हैं. So how do you do the regression analysis? हम लोग यहाँ Y लेते हैं, हम लोग यहाँ X लेते हैं. X is what? Our independent variable. Y is what? Our dependent variable. Then we try to draw a line which will represent most of the values, which is Y plus AX. So what we try to do? So from this line, we try to minimize the difference. तो वो difference हम लोग कैसे minimize करते हैं? By calculating the difference of each of values y minus y bar. फिर इसका हम लोग square करते हैं, इसको summation करते हैं, and we try to minimize this component. So again, now so y is dependent, x is independent, and बाकी options you can read out. So it is given in third. The squared, the sum of sum का मतलब क्या है कि summation का sign है. Squared हमने यहाँ square किया है. Difference between actual value and
estimated value of the dependent variable. Because it's dependent variable, so it is why it is given over here, and therefore correct answer is C. A क्यों नहीं है? Because A में independent variable लिख दिया है, इसलिए A correct answer नहीं है. बाकी दो you can read out. Correct answer is C. Next one. In the absence of covariance among securities or portfolio, if each security has an average standard deviation of 20% and portfolio has got 100 securities, what would be standard deviation? So guys, how do you find risk of a portfolio? Again, risk is given by what? Standard deviation. अगर हमारे दो सिक्योरिटी होते हैं तो हम कैसे उसका रिस्क कैलकुलेट करते हैं? Standard deviation of first one plus weight of first one square, standard deviation of second one plus weight of second one, not plus, square, and then we take a component W2, W1, W2, and standard deviation of first one, standard second, and then covariance between 1 and 2. So this is how we calculate. लेकिन ये वाला हम कब करते हैं? हम दो के केस में करते हैं. Similarly, तीन के केस में we extend the formula, चार के केस में, पांच के केस में. So in this question, what they have given that there is in the absence of covariance. So covariance हमारा 0 है. So सारे this will become 0. So the formula will reduce to हमारा क्या बन जाएगा? This square W1 square plus second का square, standard deviation of second security का square plus weight of second plus 3 का plus weight of 3, so on till 100. ठीक है. अब पहले का standard deviation सबका 20% है, so सबका 0.2 ये वाला वैल्यू है. 0.2 square, 0.2 square, 0.2 square plus plus plus, और weight कितना है? So because there are 100 securities, so सबका weight 111 हम लोग लेके चलते हैं, 111 and into 1 into 1 into 1, so you will do like this. So अंदर क्या आएगा? 0.04 100 times under root. इसको अगर कैलकुलेट करोगे तो 0.2 into 10, which will come out to be 2, and therefore correct answer is what? A. आगे चलते हैं. So now these are again quite theoretical topic, which is on derivatives, different kind of options. By the way, the topic of derivative, it covers number of key terms only. It is quite theoretical. You will hardly get a numerical on this topic in your exam. So now there are different terms. Again, you should be understanding and knowing each of them. For example, what is long straddle? Long straddle is your option strategy of a long call plus long put. Long call plus long put on the same asset, but on the same asset. So considering that your this long straddle will go with long straddle. Where is long straddle? Yeah, long straddle will go with 2. Now, what is protective put? Protective put is also known as married put. So what is married put? That on the same asset, you buy a asset and also do the put option on the same asset to cover it risk. So this is your protective put, and which is nothing but protective put A. Protective put A will go into 1. Similarly, you can look at definitions of others, and your correct answer will be B. What is covered call? What is covered call, guys? Covered call is that the seller is owning the amount. The seller is owning the amount of that underlying security on which we are getting the option. So your covered call will go where? So covered call B. So B will go with the fourth option. Correct answer is this one. Okay. Next one is from the chapter of time value of money, which is FM, and again annuity, time value of money, compounding, EMI. Again pretty simple, guys. What is okay, let's look at one by one. Process of application of interest over interest, period after period on a given specific period. This is what I hope everybody knows the interest, the definition of compound interest, the process of application of interest on interest. So C will definitely go with the 1. C will definitely go with the 1. Then what else do we have? Time value of money. What is time value of money? Widely used in field of finance for determination of monthly installment for recovery of loan in a specified time period at a given rate of interest. So this becomes your time value of money. Now there are two more which are annuity and EMI. So guys, again they look quite similar because the amount is same and they are being repeated after period. So only difference is that EMI will always cover your principal amount as well as interest amount. So your D will go with 2 and the annuity remaining A will go with the 4th. Correct answer will become D. Again, you can read them out from any book. The chapter is time value of money, FM. Next one. In SQC is what? Statistical quality control under operations management. Expected process variation is commonly taken as. हम लोग कितना लेते हैं? We take 99% confidence level. So at this 99% confidence level, your values are plus minus 3 sigma. So values are from mu minus 3 sigma to mu plus 3 sigma at 99% confidence level. Therefore, your correct answer will become mu plus minus 3 sigma, which is option 3. Next one. Who is widely credited for placing Japan as world leader in quality? Again, guys, very well-known name, Deming, W.E. So Deming ji ने क्या किया था? So Deming ji gave a lot of concepts like PDCA, जो कुछ बुक्स में PDSA भी लिखा होगा. He is also known as father of modern quality. So he gave 14 points of quality. Okay, he's from this background so guys, what he did, he wrote a book in 1982. उन्होंने एक बुक लिखा था जिस बुक का नाम क्या था? The book I don't remember it actually. I don't have it with me. So basically इस वाले book में, so what he did, he told how so at that point of time these Japanese automobile firms, they were beating US automobile firms. तो उस टाइम डेमिंग जी ने बताया था कि you follow these 14 points of quality. With that, US firms can beat Japanese firms in case of manufacturing to be general and automobile to be specific. And he's known as the father of modern quality, and he's widely credited for this placing Japan as a world leader. बाकी ठीक है, बाकी other 3 names are not very well known except Mr. Juran JM. इन्होंने 2 चीजें दिया था. One was concept of fitness of use and second one was cost of quality. बाकी 2 को you can ignore. They are not very well known name. Okay, next. So next question is on agency problem. So guys, agency problem क्या होता है? So agency problem is nothing but a conflict between manager and shareholder. तो गाइस, मैनेजर को क्या चाहिए? मैनेजर को अपनी सैलरी चाहिए, अपने पर्क्स चाहिए, पैसे चाहिए, जॉब सिक्योरिटी चाहिए, ये सब मैनेजर को चाहिए. शेयर होल्डर को क्या चाहिए? वेल्थ मैक्सिमाइजेशन और वैल्यू मैक्सिमाइजेशन ऑफ द फर्म. So it becomes a inherent conflict between their goals. So manager is nothing but a agent of shareholder only, इसलिए हम इसको एजेंसी प्रॉब्लम बोलते हैं. So the question is actions of manager are very likely to be directed towards. manager क्या करेगा? Survival and self sufficiency. वो अपनी नौकरी की चिंता करेगा, न कि shareholder का wealth maximization का. Therefore correct answer is C. Next one, it is calculating degree of operating leverage. So degree of operating leverage is given by what? Change in EBIT or change in sales, ये भी ठीक है. Contribution over EBIT, this is again same thing. अब third is also right, but एक थोड़ा सा चीज भी है. So I'll also say that it's a poorly framed question. So third में what examiner has done, that examiner has assumed that contribution is equal to EBIT plus fixed cost. EBIT plus fixed cost. So he has ignored he has assumed that interest payments are zero, which he should not have done. But anyway, the question is given. So the correct options are A, B, and C, and therefore your correct answer is B.
So the question is, the best level of output for a perfectly competitive firm in short run is a point where the price is equal to the marginal revenue, which is equal to the marginal cost, provided that. So basically the goal of every firm is to maximize its profit, and for that the firm tries to attain an equilibrium price level in the market. Equilibrium price level is what? Where the quantity demanded of a product is equal to the quantity supplied. This is the equilibrium point. At this point of level, when the firm sets its prices, it yields the maximum profits basically. So in a perfectly competitive firm, there are two approaches to attain such kind of equilibrium price level, which is the total revenue and total cost approach, and the another one is the marginal revenue and marginal cost approach. Now the question talks about the marginal revenue and the marginal cost approach. Particularly in this approach, there are three conditions for the equilibrium price. Number one is the supernormal profits. This is a point where the marginal revenue are greater than the marginal cost. Number second is the normal profits. Normal profits is what the question is talking about. It is the point where the marginal revenue is equal to the marginal cost. And number third is the minimum loss condition. Minimum losses condition. It is the point where the price is set at a level then only the average variable cost is covered and fixed costs are not covered. That is a point where the price is equal to the average variable cost. But this is a point of minimum losses. Now the question is asking about the best level of output. What would be the best level of output accordingly? It would be a point where the price at least must be greater than the average variable cost. That is, it must be able to cover the average variable cost, may not be the fixed cost. So accordingly, option 1610 is the correct answer, which is the price is greater than the average variable cost. Now the next question is, what is the role of advertisements and selling costs in perfectly competitive markets? Now see, although there is, according to the assumptions given for the perfectly competitive markets, there are generally no need of setting or incurring advertisements or the selling costs in such markets, because these kind of markets sell homogeneous products. There are no competition, so they do not have to incur such kind of costs like advertisements or selling costs. But for the purpose of promotion or for the purpose of enlarging the size of the market the industry is addressing currently, they can at least, kind of set some advertisements or incur some kind of selling cost. So all the options when considered, number one is the most suitable for the question asked, because only for the promotional purpose these kind of firms can incur the advertisement or the selling costs. So accordingly, option number one, which is 1614, is the correct answer. Next question. Now, which one of the following measures better explains the inflation in an economic ecosystem? So all the options basically are the measures of inflation in one way or the another. Now let us consider the options one by one. What is consumer price index? Consumer price index reflects the prices of a select basket of goods and services, only a select basket of goods and services. All right. So inflation is measured considering that only particular select basket of goods and services. Another similar measure is wholesale price index. What is wholesale price index? It measures or it takes into consideration only the goods and not the services. So it may not be a very good kind of measure for explaining the inflation. And similarly with the consumer price index, because it is considering only a select basket. All right. Next one is the GNP deflator. GNP deflator, what it is? GNP deflator measures the value of all the goods and services, specifically all goods and services produced in the country at current prices compared with the base price. Basically, it has a formula which is GNP deflator is equal to the gross national product is national income at the current prices of the current year, and GNP at base prices, the prices of the base year. Base year is an year selected by the government time to time. All right. So this is multiplied by 100. So GNP deflator is basically the measure of inflation which takes into consideration all goods and service of all the goods and services. All right. Among the three, this seems to be the better option till now. Now the next one is rate of change in GNP deflator. What is now? Rate of change in GNP deflator. It is basically the better or maybe the best among all because it shows the rate of change in inflation comparing the results of different GNP deflators. Like a GNP deflator is taking into consideration one particular base year's price and the current year's price. Now, if we are taking into consideration rate of change in GNP deflator, it would take into consideration different GNP deflators and then would try to explain the inflation in the economic system. All right, so accordingly, this is the best among all the options given. So correct answer would be 1656. Next question. Now, dash usually have intensive distribution because sales of these products tend to have a direct relationship to their availability. Now, what is intensive distribution? Intensive distribution is what? When a firm tries to sell its products or services through as many outlets as possible. For example, you can take into consideration the example of soaps, all right, soaps, wheat, rice, etc. So you can find such kind of products at very small, maybe the Kiryana shop in your neighborhood, ranging from the Kiryana shops to the bigger departmental store, for example, Easy Day or Big Bazaar. So this is a kind of intensive distribution. Now, among the options given, which one suits the best to the statement? This is option number 1, which is convenience good. What are the convenience goods? Convenience goods are the goods which the customers are using in their daily life or their routine life, soaps, toothpicks, etc. So these are the products which would definitely would use the intensive distribution as the marketing strategy. So option 1610 is the correct answer for this question. Next question. A price ceiling below the equilibrium price of a commodity leads to A. Commodity glut in the market, shortage of commodity, demand erosion, black marketing. Now, what is a price ceiling? First of all, price ceiling is a level where is a price level above which the firm is not allowed to set its prices. And equilibrium prices, just now in the previous question we have read that it is a point where the quantity demanded of a product is equal to the quantity supplied. This is the equilibrium point. All right, when the price ceiling is set below the equilibrium price, which is maybe somewhere here, this is P, this is level P1, and this is the quantity. Now, see, in this situation, when the price is set at this level, what is seen that the demand curve is higher than the supply curve, which is demand is greater than the supply. So straightforwardly, we can remove option C, correct, demand erosion, no, because demand is clearly seen to be higher in this situation. Second is commodity glut. Glut is what? Excess supply. The meaning of glut is excess supply. This is also clearly seen as incorrect. So we are left with option B and D. Now, whenever there is the demand greater than the supply, obviously there will be a shortage of the commodity, and with shortage it would lead to, or as a consequence, black marketing comes into the scene. So shortage of commodity and black marketing, these two are the correct among all the points given. So accordingly, what option would be the correct? It is B and D only, which is 1763. Now comes the next question. The next question reads as the essential conditions for price discrimination practice to succeed in different markets are. First of all, what is price discrimination? Price discrimination is basically a phenomenon where the same product is sold by a firm in different markets at different prices at the same time. All right. So for price discrimination, there are certain conditions given. For example, there must be a difference in elasticity of demand in both the markets, so that if we are setting different prices in the market, we must get some response to the quantity demanded in relation to the price. That is, there must be a presence of elasticity of demand in different markets, which makes our statement D as correct. The next one is the firms must have some power to set its prices. That is, if the firms have the power to set its prices, then only they will be able to set different prices in the different markets. All right. This makes our option number B as correct. The statement B is also correct according to this. And then the markets of the products must be separable. Only then we'll be able to sell the same product at different prices. Only when the markets can be separated, when there are 2 or 3 markets, then only we'll be able to set the different prices for the similar products. So it makes E also as the correct. So accordingly, B, D and E, which option seems till now the correct? Which is 1768. Now let us consider the other statements also. That the firm must have strong interdependence. No, this cannot be a condition for the price discrimination, because when the firms have certain kind of interdependence, they will have to, for setting up prices also, they will have to have certain kind of interdependence. And basically the one major point is this price discrimination is the basic feature of a monopoly firm. All right. In other kind of markets also, this can be, practiced as a marketing or pricing strategy, but this option A is a clear feature of an oligopoly market. So in this, if we see the option in that context also, it gives us a clear idea that this cannot be a correct one. Now the C option is differentiated products and strong entry restrictions. No, this is clearly not a condition for setting up a price discrimination kind of practice. All right, so accordingly, B, D and E are the correct statements, and our option 1768 comes out to be the correct answer for this. Next question. This is match the following. All right. Now let us consider the first one. What it was, it is snob effect. Snob effect. Snob effect is basically the desire of specifically the higher income groups to buy certain products which makes them stand out. All right, some luxury products or such kind of products which are unique and which are precious, and most importantly, they should not be commonly owned by majority of people. So statement number 2 seems to be matching with the statement, which is different. They want to consume different and exclusive kind of products. Now the small world model is this is the correct statement for this. Here what happens is a corporate giant, if it wants to operate as a small firm, it can operate as a small firm by connecting the individual from each level of the organization to the another world. As the name also is suggesting, small world model, that is a giant firm tries to or wants to operate as a small firm. So statement 4 matches with the small world model. Next is Stackelberg model. Stackelberg model is the model where the leader firm moves the first and then the follower firms move sequentially. So here statement 1 goes with this, where it is given that a firm, if the firms are disproportionately powerful, the market leader makes the first move. All right. So it would make the first move. Then the sales maximization model, D. Now, even if you have no idea about what is a sales maximization model, you could clearly mark 3 as the correct statement matching with this, because it is clearly mentioned here that a firm, oligopolistic firms, they seek to maximize their sales after an adequate rate of profit has been earned to satisfy the stockholder. Clearly the maximize sale word is given here. So you could very easily crack this question. So correct option here is 1866. Moving to the next one. Arrange the following economic identities in a sequential evolution to understand the consumer demand. Now, to understand the consumer demand, what would a firm do? We have to sequentially put these in a straight line. Now, what would the firm try to do? First of all, if it wants to introduce a product and it wants to understand the demand of the consumer regarding that product. First of all, the firm will be doing utility analysis. All right. Number one will be, let us write it here only, utility analysis. They will try to analyze the utility that kind of product they want to introduce would provide to the customers. All right. The second they would do is indifference curve analysis. Indifference curve analysis would show that the all combination of goods that provide an equal level of utility or satisfaction to the consumers. Okay. So what happens is when the firm tries to introduce a product, it would try to first of all understand the utility that product would give to the customers, and then certain combination of products that would kind of provide similar kind of utility to the customers. Now the third one would be the law of demand. They would try to understand. Law of demand is when the price of a commodity increases, the quantity demanded decreases. This is basically an inverse relationship shown between the price of a commodity and the quantity demanded of a commodity. And so this is basically is the law of demand. It tells us the price and quantity demanded relationship. All right. Then the firm will see how the prices would be affecting the demand of the certain commodity. Then the firm would go for the demand elasticity analysis. This is what? Now we know that the price of a commodity, if is increased, the quantity of that particular commodity, the demand of that particular quantity would be decreased. All right. So demand, the elasticity analysis would tell us the sensitivity with which the change in price would cause the change in the quantity demanded. So this would be done after understanding the first relation between the price and the quantity demanded. So this would come at the fourth number. And the last one is the demand forecasting. Demand forecasting, after analyzing all the issues given, then comes the demand forecasting. In this, supply decisions would be optimized. Now the firm will know that what kind of product is asked by the customers and what kind of supply chain or other decisions regarding the supply has to be taken. So demand forecasting comes at the fifth number. So option number 1902 comes out to be the correct accordingly. Next question, 486. There are two statements given. One is assertion and the another is the reason. Assertion, let us read assertion first. Assertion, an oligopolistic firm cannot decide the price it wishes to charge as well as the quantity it wishes to sell both at the same time. Correct, it is true. The reason given is an oligopolistic firm takes into consideration the competitor's action and counter actions because of a strong interdependence among the competitive firms. Absolutely true. See, oligopolistic firms basically are the most realistic kind of markets. All right. Few dominant sellers here, they try to sell homogeneous products or differentiated products, but they always take into consideration the rivals' actions. For setting up any price or for introducing any product in the market, they always take into consideration their competitors' actions. So the assertion given and the reason given both are correct, and the reason given is actually absolutely the correct explanation for this. So 1941 comes out to be the correct answer for this. Moving to the next one. Which one of the following information type is not included in a skill inventory? Now, first of all, let us know, or all of you must be knowing what is a skill inventory. A skill inventory is basically a compilation of the skills, technical skills or soft skills, the educational background or the experiences of current employees of the organization. Now this is the extremely easy question, because seeing at the options only you can crack the correct answer. This is basically a kind of odd one out question. So the options given are the employee's personal data. Obviously, this would be included in the inventory. Second one is the employee's potential. Obviously, it would be included. The salary and job history. Now see this one, 1602, organization's training schedule. There is no need to introduce or include this in the skill inventory because it has no relation with the employee's skill set or whatever it is. So organization's training schedule can in one go can be marked as the correct option. So 1602 is the correct answer for this. Moving to the next question. Next one is information regarding the personal job demands, human expenditure involved in work such as energy expenditure collected in job analysis falls in which one of the following? Now, what is a job analysis? Job analysis basically tells us the responsibilities and the duties and the responsibilities attached to a particular kind of job. Now, all the options given are the components of the job analysis. Now, these particular components have some sub-components also included in them. So for this personal job demands thing, this is a sub-component of work-oriented activities. Work-oriented activities, it also includes other thing also, this work-oriented activities wala component, it includes personal job demands and the communication gaps or the physical actions on the job, another thing. So basically all the components have certain sub-components, and this specific one comes under the worker-oriented activities. All right. So this comes out to be the correct option for this, which is 1626. The next question is, which one of the following orientation programs seek to ratify the usefulness of the characteristics that the person brings to the new job? So this one is the investiture orientation. Investiture orientation is the kind of orientation program where the person current skill set or the current characteristics are put to use for making the orientation program for that particular individual. All right. The opposite to this is the divestiture orientation. In this, minor kind of modifications are need to be made to the characteristics of the new employee, which is being inducted in the organization. The another one is disjunctive and serial. Basically, the divestiture and the investiture are opposites to each other, because in investiture there is no need to be made to the characteristics of that person, and in divestiture there are minor kind of modifications. So you must not have got confused with these two. This is the clear answer. And the other options are disjunctive and serial. Disjunctive is the one where there is no senior employee available to guide the new hire, and serial one is where there is to guide the new hire, there is the availability of a senior employee. So here the senior employee is available to guide the new hire or to make the induction of that new hire possible. So the correct option in this is 1631. Moving to the next one. The holistic, integrated and the goal-oriented process of planning, recruiting, selecting, developing, managing and compensating employees is known as. This is the definition, and this is correct, straightforwardly being taken from the Gary Dessler book. This is talent management. Now this can also be understood as, talent management has basically 4 pillars, which is very famous thing. 4 pillars are there for talent management. First one is recruitment and selection. Second is corporate learning and development. Third one is the performance management. And the last one is the compensation management. So if you know the 4 pillars of this talent management, you could clearly crack the question in one go. That is talking about recruiting, then selecting, then developing, which is development and learning, and then compensating. So talent management is the correct option for this, which is the option ID 1643. Moving to the next question. Which one of the following performance appraisal methods present supervisors from rating all or most employees satisfactory or high? So let us see the options one by one. Alternation ranking method. In alternation ranking method, what the supervisors do is they try to select the best and the worst employee according to some of the given characteristics or some of the predetermined standards. Next one is the critical incident method. This is basically based on observation. They try to observe the behavior of the employees on the job, and basically what kind of incidents occurs on the job. Such kind of things are being observed, and this method is known as the critical incident method. Now let us see the paired comparison method. In this kind of method, there are in pair of employees are paired. For example, AB is an employee and B, D and C, D and E is an employee. So pair of employees are made and then they are being compared with each other. Next is, and the correct answer obviously, is the forced distribution method. Now what is the forced distribution method? In this kind of method, the employer tries to put the employees on a bell-shaped curve, which is a normal distribution curve. And in this kind of method, the focus of the employer or the supervisors is to put maximum number or most of the employees in the middle portion of the curve. The best performers or the least or the poor performers basically lie on one side or the other extreme of the curve, and the most of the employees which are performing like normally, they are put on the middle section of the curve. For example, there are 100 employees working, 70 would be falling on this part of the curve, 15 here and 15% here. All right. So this is a kind of this method considers or takes into consideration the normal distribution curve for grading the employees. So according to the question, it is asking that it prevents which of the following method basically prevents the supervisors from rating all or most of the employees. So in this method, all or most of the employees are put where? In the middle section of the curve, not high, not satisfactory. All right. So this is clear that forced distribution method is the correct answer, which is 1646. Next question. Which one of the following is not desirable while handling a grievance? This is also a very easy question. Like even if you have no clue about what is a grievance or what is a grievance handling procedure, even then you could have marked this question as correct. Let us see the options. Option number 1 is examine the grievant personnel's record. Yes, obviously this would be desirable in handling a grievance. Another one, the next one is hold the grievance discussions privately. Obviously this can happen and is desirable, of course. The next one is make arrangement with individual employees that are inconsistent with the labor agreement. Inconsistent. How can something inconsistent with an agreement can be desirable while handling something or anything, be it grievance or anything else? It straightforwardly makes it an illegal thing to do. All right. So this is clearly the correct option, which is not desirable. Not desirable is there is nothing desirable which is inconsistent with any kind of labor agreement. All right, the last option, let us see that one also. The union will identify specific contractual provisions allegedly being violated. Obviously, this can be this is basically desirable thing in handling a grievance. So according to this, option number 3rd, which is 1750, is the correct answer. Moving to the next question. Entrepreneurs who are characterized by a refusal to adopt opportunities and make changes in production systems, even if it affects the return of the organization, are called. If you have read about the types of entrepreneurs, you could like in one go mark the option number 1 is correct, which is drone entrepreneurs. These are the entrepreneurs who always resist change. These are also called as old school kind of entrepreneurs who are very adamant to change and they do not like change. The same thing is the question asking, that is they have a kind of refusal to adopt the opportunities or make changes. But yes, in this question, the another option given is Fabian entrepreneurs. This could also be confused with this because Fabian entrepreneurs also are very cautious and are not easily, very easily they do not accept any kind of change, but still they are not that adamant as other drone entrepreneurs are. So option number 1756 is the correct answer. Next question. To achieve its aim in strategic human resource management, organizations formulate and execute human resources. Which of the following? Policies, behaviors, practices, competencies. Strategic HRM is the process of linking the HR functions with the strategic objectives of the organization. Now, Gary Densler has given this definition also for the strategic human resource management. It has the same words which are given in the question. That is, to achieve its aims in strategic HRM, organizations formulate and execute the human resource policies and practices. This is also the definition of a strategic HRM, and even if you have no idea about the definition, you could have marked this option or this question correctly, which is 1782 is the correct option for this. Next question. Out of the following, which are the most common error committed by the entrepreneurs? Now, let us see the options. To anticipate roadblocks. No, this is not an error. In fact, this is a good thing to have been done on the part of the entrepreneurs. Second is no commitment or dedication. Yes, this is an error. If you have no commitment or dedication towards the business you are going to take up, this is a major error you would be going to commit. Next one is proposing market niche. Proposing a niche market is or cannot be an error in itself, because this is a good thing if an entrepreneur tries to do. Next one is lack of demonstrated experience. Obviously, if you do not have any hands-on experience on the kind of business you are going to start, you would be making a huge error. All right. The next one is no realistic goals. Obviously, if the entrepreneur has set unrealistic goals or unmeasurable kind of goals, he or she would be making a major blunder to his or her business. So this also is the most common error they must be committing while getting into a business. So which all are the correct? B, D and E. B, D and E. Other two are the good things and not the errors to be considered. All right. Second question. Notable myths about entrepreneurs and entrepreneurships are, let us see the options one by one. First one is entrepreneurs are academics and social misfits. Yeah, this is a correct myth. All right. Second one is entrepreneurs must fit into an ideal profile. Yes, this is also a myth about the entrepreneurs. Next one is entrepreneurs are doers and thinkers. No, actually the myth is they are doers but not thinkers. They are not thinkers. The myth is actually this. So this statement is incorrect. Another one is all entrepreneurs need is money. Actually, this is a myth about them. Another one, entrepreneurs are not born but made. No, this is completely incorrect, because the myth is that entrepreneurs are born and not made. So the correct option comes out to be option number 1, which is 1811. Next question. Match the following. All right. In list 1, entrepreneur type is given, and in list 2, the features based on their competencies is given. Now this can be done with the help of a box. If you learn the kind of entrepreneurs and their competencies in this way, like by making a box, it would be very easy for you to crack this question. First one is passenger. Next is the star or ideal. Another one is deadwood. Another one is may run. See, now the passenger one are the kind of entrepreneurs who do not have the ability, but they have the will to do the work. These kind of entrepreneurs are needed to be trained by the organization. They need training. Next one are the star or the ideal. They have the ability also and the will also to do. So they are called as the star or the ideal kind of entrepreneurs. The organizations, try to further motivate them so that they perform much better ahead. Deadwood. Deadwood is they do not have, see, as the name suggests, they do not have the ability and they do not have also the will to do anything. So these are basically, they becomes the burden to the organization. So better would be to offload them or bear the burden. What would be the better option? That is to offload them. All right. Next is may run. May run are the kind of entrepreneurs who have the ability, but they do not have a will to do. These may still be, motivated further, or they may be counseled further so that they try to, generate a will to do that because they already have the ability. So by having a look at the box, we can clearly mark the correct option, which is 1898 as the correct option. All right.
Okay. So moment of truth in service marketing was given by. So there are 4 options. So basically, Moment of Truth is actually a book which is written by Jan Carlson. Okay. So what does it say? It says whenever customer and the organizations comes in contact, okay, after purchasing, so there is always an option, or I should say opportunity, to improve your image or rather change the image. Okay. So this concept is given by Jan Carlson. Therefore, answer is 1701. Okay, next question. So next question says, which one of the following tasks is not expected to be performed in sales management? Okay, so everything should be related to the sales management. Okay, so now there are 4 options, and determining sales, designing sales territories, determining the selling price, formulating sale policies, selection and recruitment. So if you see option B, which is says determining the selling price of the firm's product. Okay, so sales is always about related to the quantum of the sales. Okay, how we can increase the sales. So this is not directly related to the sales management. It's rather more of a marketing task. So therefore option is B, which is 1708. Next question. So one of the key tasks of a marketer is to dash and to create a perception among consumers that the product is worth purchasing. Okay, so the key task of the marketer is to create a perception of the perception in the consumer mind. It is basically talking about a positioning of our brand. Okay, so if you see option A, it says differentiating your product from those of our competitors. Okay, so when we communicate the similarities and the differentiation of your product from the rest of the product, therefore the correct answer is option A. Okay, moving forward to the next question. Next question says, in the retail industry, a category killer is referred to as. So what is category killer? So category killer is simply talks about if there is a specialty store for a single product line or an assortment of product line. So this is what a category killer. Okay, so now if you see the options, and if you see this option, it says a specialty store wedding to a discounting and domination of a product category. Okay, so if there is a domination of a product category, so therefore the correct answer is option B, which is 1710. Okay, moving forward to the next question. So the next question says, out of the following, which are correct forms of product life cycle? So product life cycle is actually a bell-shaped curve, which is like this. It has 4 stages: introduction stage, growth stage, maturity stage, and then the declining stage. So the normal pattern of the graph, if you plot against sales and time, it would be like this. So option statement A is absolutely one of the form. Now there are 3 specific pattern which is also provided, and these patterns are also provided in the Kotler book. So these are scallop, cycle, recycle, and growth slump, which is growth slump maturity pattern. Right, so the maturity word is missing, therefore option statement D is not the correct statement, and the correct answer is A, B, and C. So what is growth? What is scallop? Scallop would be like this. Now what is cycle recycle? Cycle recycle would be like this. Okay, now what would be growth slump maturity pattern? It would be like this. Okay, so therefore correct answer is option A. Now moving forward to the next question, which is, in consumer market, for a market segment to be an effective and viable target, the segment should be among these things. Okay, so what is market segmentation? Actually, market segmentation is dividing the market in terms of whether geography, whether demography, whether psychography, or all of those things. Okay, so now we want to be effective. Now identifiable, definitely. Reachable, definitely. Sizable, definitely. Now transcending international boundaries. I mean, there is no need to transcend international boundaries. Even within the country, you can segment your market. So this is not the correct statement, and therefore the correct answer is A, B, and D, which is this 1830. Okay, moving forward to the next question. Okay, so now next question says that there is a brand concept, which are 4, and their correct meaning. Okay, now if you see the statement itself, you can get to the answer. Brand image. Now see the statement 2.
Okay, it says image of the brand in the consumer mind. So A would be definitely true. Okay. Second is brand feelings. Brand feelings is what? Brand feelings is actually the response of the consumers, or I should say reaction of the consumer. Okay. So what can be the correct answer? Now, customer emotional response and reaction with respect to the brand. Okay. So therefore, brand feeling would be 1. Okay. Brand position. Okay, now again, if you see statement 4, it says deliberate attempt on the part of the marketers to create a unique position. Okay, so C is 4. Brand silence. Okay, the only option remain is the C. Okay, so how customer think of the brand under various purchases. So what is brand silence? It specifically means what are the noticeable qualities of your brand. So therefore, through this, it can think brand under various purchase situations. So this is the correct chronology, and therefore the correct answer is 1884. Okay. Next question. So the next question talks about the product hierarchy. Product hierarchy is stretched from the basic needs to a particular item in some sequence. Okay. So actually product hierarchy is specifically given in the Quartile 14th edition, and it is consists of following things: product need family. Okay. Product family. Then there is a product class. Then there is a product line. Then there is a product type. Okay, and there is one more category which is item. So you can easily find out the answer by knowing these stages. Now, if you see the answer, first is the D option, which is given in these two things. Then would be product family, which is DB. Okay, so again DBCEA, DB. C is the product class, then product line, and then finally product type. Okay, so the correct answer is 1923. Moving forward to the next slide. So sequence the innovation adoption process that consists of 5 stages which potential consumer pass through while attempting to arrive at a decision. Okay, try and innovate product. Okay, so there it is related to what? Stages of stages when we introduce a new product and stages of adoption when we introduce a new product. Okay, so what are these stages? First stage is the aware. Then the next stage is consumer getting interested. Third stage is consumer evaluate that product, whether in its mind or whether taking a test drive or anything. Finally, he or she adopt that product. Okay, so if you see the options here, you can easily say that E is talking about the awareness, get aware. Okay, then D specifically talking about interest. So ED, if we see ED pattern is only given in this option, therefore this would be a correct answer. Now B also says mental trial, which is evaluation. And then A would say consumer tries innovation. Again, it is comes in the evaluation. And then finally, he repeat that that pattern which is in adoption. Okay. So correct answer is 1932. Moving forward to the next question. When companies offer products in small packages or charge on a pay-per-use basis, then such strategies are a part of. Okay. So finally, if you see option D. Strategies for the bottom of the pyramid. So bottom of the pyramid is actually given by the C.K. Prahlad. It specifically says that that there is a very large market which is actually not become a part of a market because of their financial conditions. Okay, so they are actually at the bottom of the pyramid. Okay, so so basically this pyramid talks about that if we design a particular strategy which is pay-per-use basis, in this case we can actually take care of their financial concerns also. So therefore the correct answer is strategies for the bottom of the pyramid. Okay, moving forward to the next slide. Once a company has appointed the dealer, the main element of a dealer motivation then are. So dealer motivation. Okay, what are the distribution motivations that the dealer has? Okay, now if you see B, C and D. Okay, trade discount, special incentives and effective communication. All these three are actually the motivation for the dealers. But territory of operation is basically more related to the manufacturer or the production firm, that what is my territory of operation and what are those things. So therefore it cannot be a motivation for the dealer, and the correct answer is B, C and D. Okay. moving forward to the next slide. Now, out of the following, the examples of radical innovation. Okay, so what is radical innovation? Radical innovation is specifically any kind of strategy that will, revamp your earlier strategy or even replace that strategy. So that is why it is radical in nature. Okay, now if you see these examples, you can easily get the answer. A is the personal computers. Yes, personal computers drastically changed the market, so this is right. Disposable diapers, yes. Overnight mail delivery, yes. Okay, so therefore the correct answer is A, C and D. Now, frozen yogurt is not actually a radical change, and even microwave popcorn is also not a radical change. Okay, so therefore correct answer is A, C and D. Next question. Technical feasibility analysis will include which of the following? Okay, so basically this question is about product testing. Okay, so what are the or even I should say new product development process. So it has many stages. It started with idea generation, then it moved forward, and finally after passing various processes it will reach to commercialization, right? So if you see here, all of those things are covered, like crucial technical specification with respect to the design and product safety. Yes, it is a technical feasibility analysis. Engineering requirement, again it is a technical feasibility analysis. Okay, now product development, yes, definitely whatever the product concept the company has, it has to be developed according to that. Okay, product testing, yes, by taking market surveys and all. Plant location, yes, also a plant location is very important. So therefore the correct answer is A, B, C, D and E. Therefore B is the right answer. Now match the column. Now if you see here, there are two lists. First, list 2 talks about what happened and why it has happened. It is given in the list 1. Okay, now the correct answer is given 1886, which is A ka 4, B 3, C 2 and D 1. Now start from list 2 and then go to the list 1. Okay, inventory is either too high or too low. In this case, there will be an erratic level of customer services. Okay, a random level of customer service will be happen then. Okay, fine. If you see option B and then statement 3, production lacks confidence in marketing department. Why it lacks? Because option B, no vision of future demand and its impact on production. Okay, great. Now statement 2, lack of agreement between different departments. And why it happened? Because there are too many changeovers in the production, therefore there is a lack of agreement. Okay, so this is the correct. Now inventory is in the wrong place at the wrong time, and therefore there is a stock out in the inventory, and correct answer is 1. Okay, so if you see the options, option D is the correct answer. Next question. What is the role of advertisement and selling cost in perfectly competitive market? Okay, so what is competitive market? Competitive market is an idealistic market, right? There is a demand and there is an equal supply. Everyone is a price taker and everything is right. So if you see option A, this is the only thing that can happen when you advertise your product. Your market size can increase, nothing can be happen because buyers are already satisfied, information is already available, and there is no necessity for the firm to survive. Okay, so therefore correct answer is option A.
Now the question is on DuPont analysis. DuPont analysis formula involves which financial elements for computation of earning power? So if anyone knows about DuPont analysis, he will be able to definitely mark this answer right, because it's a simple formula of DuPont analysis. So what actually DuPont analysis is? DuPont analysis is basically it is a indicator by which the investor compare the operational efficiency of the two similar firms, right? So it has basic 3 elements, that is net profit margin, NPM, and then total asset turnover, and then equity multiplier. And what are the basic 3 components of it is, that is net profit margin is calculated by dividing net income of the firm by its revenue. So what actually NPM is? NPM indicates that what is the quantum of net income as compared to the total sales revenue of the firm. Now coming to the asset turnover ratio, what is the formula to calculate this? Sales upon average total assets of the firm. So basically this ratio indicates that how much efficiently the firm is able to use its assets to generate revenue. Okay. And lastly, equity multiplier. How do we calculate this ratio? Total assets divided by total shareholder equity, right? So what actually equity multiplier indicates? It indicates, it's basically a risk indicator. It indicates that how much the total assets of the firm are financed by shareholder equity. Okay. So as compared to debt, how much they are financed by shareholder equity. So these are the three essential elements which will help the investor analyze the operational efficiency of a firm as compared to other firms. Okay. So definitely the answer should be this first one, because three of them are given in the first option. Okay. Next. Now in this next question, information of ABC Limited for two of the years 2018 and 2019 is given, in which sales and profit related information is given, and we need to calculate PV ratio. Okay, so this is again very simple question. What actually PV ratio is? PV ratio is nothing but change in profit over the 2 years, change in sales divided by change in sales into 100. So this is very simple formula to calculate PV ratio. How much is the change in profit over the 2 years? That is 7 lakh is the profit, and if it is given in bracket, it means in 2018 there was a loss of 3 lakh. So we will write minus before doing anything, right? And in the denominator we will take the difference of 2019 and 2018 sales figure. So 57 lakh minus 32 lakh. So if you solve it, so this makes it 10 lakh divided by 25 lakh into 100, which comes out to be 40%. So the answer should be D. Option 1661 is correct to this question. Next. Next question is the process of converting a non-productive inactive asset into a productive asset by selling receivables to a company that specializes in their collection and administration is described as. Now 4 of the options are given. It is the short answer is factoring here, and rest of the 3 options is just to confuse. Okay, so what actually credit administration? It is very generic term. Credit administration is a department in a particular financial institution or bank which takes care of the credit related things, right? And credit rating, we know that every time how much we are capable of paying our liabilities or debt we have obtained from any bank or any financial institution, that determines the credit rating of the person. So again, this is nothing to do with selling receivables to some other party, right? So receivable management is again an internal thing of the company. Receivable management is that basically by this thing the company wants to ensure that the credit sale should be converted into cash. The cash should be generated against credit sales. And what actually factoring is? Who is a factor? Factor is basically who is able to provide cash or financing services by purchasing the receivables of a particular company. So after that, it will not be a botheration for the company to generate cash out of those receivables. It becomes the botheration of that purchasing company after that, right? So factoring is the answer to this question. Okay. The computer system most likely to be used by a large bank for the saving account of a customer would be, so it is talking about computer system of a large bank and in relation to saving account of the customer. So whenever, so think like you are a customer of large bank, any large bank, okay? So saving account, whenever you open, what options you get? You get options of RTGS payment and transfer through NEFT, right? So all the online transactions you are able to do once you log into your account. So naturally, it should be online and real time system. So it must be capable of providing services to the customer which involve large amount and that too on real time basis. So this should be the answer to this question. So batch processing system or any direct access database, they have nothing to do with this thing, because in this the transactions are settled on batch to batch basis. So direct access database system, it cannot be the answer to this question. Generalized utility system, it's a generalized utility system. So again, it will not be useful. So it should be online and it must be providing real-time netting of the transactions, right? So the answer to this question should be 1745. Next. Now in this question, the salient features of zero-based budgeting have been asked, right? So 5 of the options have been given to you. It's a decision-oriented approach. The decision unit is broken into understandable decision packages which are ranked according to importance. So if you go by this thing, so what actually is zero-based budgeting? Actually, what it is? Zero-based budgeting is whenever we do not use previous year figures in order to determine the budget of the next year. That is zero-based budgeting. It means everything we start from scratch. So we prepare the budget figures from the scratch, from zero, and in it various departmental heads have to contribute to reach out to the budget figures. Okay, so these are the keywords of this zero-based budgeting: scratch, or we are starting from scratch, or zero. Okay, so then now if you look at the options, so it's a decision-oriented approach or it's an accounting-oriented approach. So these are two opposite statements. Either of the two should be correct, right? And if you look at C and E option, the responsibility is shifted from top management to the manager of the decision unit. And in E option, they are giving top management decides why a particular amount of money should be spent on a particular decision unit. So again, these are the two opposite. C and E are two opposite statements. So in this, top management will not decide. The responsibility, the onus is on the departmental manager to justify each and every element of the cost that has to be presented in the budget. Okay, so ideally this should be correct, right? Accordingly, this should be correct. The responsibility is shifted from top management to the manager of the decision unit. Okay, it's a decision-oriented approach, whereas traditional budgeting is accounting-oriented approach because it is based on cost accounting. So this is related to traditional budgeting. So if it is true with respect to traditional budgeting, it must be correct with respect to zero-based budgeting. Okay, so A and C are the short answer to this question. Next, B. If you look at the B statement, decision unit is broken into understandable decision packages. So again, we need to understand that what has been a priority element. Okay, so that is why the decision packages are ranked according to their importance. So this one is also correct with respect to zero-based budgeting. So this A, B, C should be correct. Now, if the top management decides why a particular amount of money should be spent on a particular decision unit, this is not zero-based budgeting, it's a traditional budgeting. Okay. So A, B, C should be the correct option to this question. Next. Now the next question says, fund flow and cash flow statements are important managerial tools and help the firm to know liquidity position, capital expenditure incurred, dividend paid, extent of external financing. Now we have to identify in which thing these cash flow statements and fund flow statements helps, right? So what actually FFS? So FFS was prepared way back. Now CFS is prepared. Cash flow statements are prepared. So what actually FFS and CFS are? The fund flow statement, it's a statement which shows changes in the net working capital, right? And what cash flow statement is? Cash flow statement is it basically gives you inflow, the information about inflow and outflow of cash and cash equivalents out of basically three kinds of activities, that is operating, investing and financing activities, right? And in this fund flow statement, again, various sources of funds and their uses or application, uses of funds is determined, right? So both of them helps to determine liquidity position. Although CFS is more informative about liquidity position, being because it is prepared on cash basis, right? And FFS is prepared on accrual basis, right? And it also gives us how much expenditure is incurred on plant and machinery or acquiring various fixed assets for the company. Okay, then how much the company is paying on account of dividend. What is the extent of the external financing? How much the funds have been borrowed from the outside parties? These statements help to determine all these aspects. Okay, so that is why A, B, C, D. Everything can be obtained by using fund flow and cash flow statements. Okay, so 1796 is the correct option to this question. Next. Now, in this question, there are two lists in which on the one side they are giving INDAS numbers, and in the list 2 they are giving you the nomenclatures of the accounting standard. Now, again, this question is not rightly framed because there are basically two. In India, if we talk about India, we have two sets of accounting standards. One is existing accounting standards. These are issued by ICAI, right? And another one is Indian accounting standards. These are converged or harmonized, converged form or harmonized form of IFRS. What is IFRS? IFRS is International Financial Reporting Standards. International Financial Reporting Standards. Okay, so IFRS basically they have not been obtained, they have not been applied in India as it is. Only their converged form, which are according to the needs and circumstances prevailing in Indian economy, they have been adopted in the form of INDAS. Okay, fine. So when we see, when we look at list 2, actually they are talking about existing AS, whereas in the list 1 they are giving you numbers of INDAS, this one. Okay, so UGC NET has given combination of these two. Okay, so if we go by existing AS numbers, so this AS 11 is on effect of change in exchange rate, AS 2 is on valuation of inventories, AS 3 is on cash flow statement, and AS 9 is on revenue recognition. So it is the list of existing accounting standards. Okay, so this question is a bit wrongly framed. Okay. So the answer to this question is A2, B3, C4, D1 and option ID 1876 is the correct answer to this question. Next. Now, in this question, arrange the following to describe the sequence involved in CVP analysis, cost, volume, profit analysis. What actually cost, volume, profit analysis is? Cost, volume, profit analysis is how much is the effect on the profit due to change in cost or change in sales volume, right? So we calculate contribution figure. What we calculate contribution? So sales minus variable cost. We arrive at the figure of contribution, and then we deduct fixed cost out of it, and then we reach on to the figure of profit or loss. Okay, fine. Operating income for the business entity, right? So if the contribution is equal to fixed cost, then that is giving us the break-even point. So beyond that point, if we sell even one single unit, we will be able to generate profit, right? So there is a particular sequence, theoretical sequence in which this CVP analysis happens. Okay, so first we have to distinguish between the fixed and variable cost related to the product. Then only we can calculate contribution, because variable cost has to be deducted from sales in order to arrive at the figure of contribution, right? Then calculating the relationship between sales volume and sales revenue by actual or assumed unit prices. So what we have assumed or what we have actually incurred, the comparison of both these figures have to be done, and then we calculate the PV ratio. Okay, so again PV ratio is change in profit divided by change in sales. That needs to be calculated. So calculation of break-even point or break-even chart, that is a later part of this process. Okay, so first is this A, second is this E, and then we calculate PV ratios by calculating contribution, right, as a proportion of sales revenue. And then what next? Then we come to break-even charts, okay, which establish the point at which the sales start to produce profit. Okay, so whenever this contribution is able to recover fixed cost, that is the point which gives us the break-even point for our sales, right? And then last is we arrive at cumulative effect of each product on profitability to assess the effect of change in product mix. So for various products, we analyze this thing and then we determine their cumulative effect on profitability. Okay. So this is how the cost volume profit analysis takes place. So accordingly, A, E, C, B, D. So this should be the correct answer to this question 1917. Next, in the context of data mining, which one of the following is a method of data reduction? Now, what if you do not know anything about data mining? What is data mining? Data mining is whenever there are large databases, and out of those large databases we need to obtain certain new information, something very productive information we need to obtain, and that is called data mining. Okay, out of large databases, pool of databases. Now, what if you do not know anything about data mining? Look at the options available. We are talking about method of data reduction. Which one of the following is a method of data reduction? Data compression, multiple regression, normalization, outlier analysis. So if by fluke basis I have to go, so if they are talking about data reduction, so the most eligible option according to this, which can be related to this data reduction, is data compression, right? So this should be the probable answer to this question. And however, it is a true answer to this question, data compression, right?
Okay, so let's start with this question. It says that at the business level, organizations need to position their business as being low-cost leaders or differentiated. The position when cost leadership is high in terms of lower prices or lower cost and differentiation is low is called. Now this can be understood with the diagram that if we have either a narrow target market or a broad target market, or we can either have low cost of production or high cost of production. So if we have low cost of production in the narrow market, then it is known as cost focus, because we are focusing only a particular sector of the market and we have the benefit of low cost. Then if we have low cost in big sector of market, broad target, then it is known as cost leader. Similarly, if we have high cost of production, but we are focusing only a narrow target, that means we have differentiation focus, that we are differentiating our products, but only for a narrow sector, and so, it is only differentiation or differentiating leader when you are focusing on a broader target market. So in this case, it is asking the cost leadership is high, that is you have a low cost, but or you can say low prices or lower cost, but differentiation is low. So differentiation is low, that is you have narrow target, so it is a cost focused market, or you can say you are the focused cost leaders. Okay, so next is the reasons why firms enter into strategic alliances are. Now strategic alliances are when two firms enter into an agreement that they will produce something, or they will manufacture something, but they will have their separate roles or identities. Like no one will interfere in each other's decision, but they will have an agreement to participate or to mutually benefit each other. Okay, and these strategic alliances are formed to enter new markets, correct? Because they want to enter new markets, either it could be internationally or even domestically. Abide by government regulations? No, you do not enter into strategic alliance to abide by government regulations. Reduce manufacturing costs, right? Because when you alliance or when you pool your resources, then your manufacturing cost will reduce. And developing and diffusing technology, correct? Because one company could have a particular technology, other will have a particular technology, and when they will diffuse their technology, then they will have efficiency in the production. Or they can also use their combine their R&D and have develop new technologies, so that will benefit both of them. Okay, next is this question is matching, and you have to match the different structures to their characteristics. Now these are the different organizational structures. Now as we can understand the simple structure, we know that simple structure means that there are less departments in the organization, only few departments are there, so it will have a simple structure of organization. Functional structure is when the department or when the organization is distributed on the basis of functions, like the production, there's a production department, there's a sales department on the basis of a particular function. Team structure is when you are dividing our organization on the basis of work group. Like for product A, we have a group where for product A, in that A, we have the production, sales, every department for product A. So that is a team of product A. Then similarly for product B, we have another structure for product sales. So when we are dividing it according to the work group, then it is a team structure. And learning organization structure is, as the word suggests, that when you are learning from that structure, or when you are adapting to the changes. So simple structure, as we can say in this one, is that it is an organizational structure with low departmentalization, wide span of control, and little formalization. That is, there is low departments. Then functional structure is on the basis of your organizational design that groups similar occupational specialities together. So this is A, B, and team structure is when a structure is made in the form of made up of work groups. So that is a team structure, and a structure that supports an organization capacity to continuously adapt and change, that is a learning organization. So our correct answer is this. For A we have fourth, for B we have third, C second, and D first. Then in this question it is asking, there are two statements are given and we have to identify if the assertion is matching with a reason. So the assertion is that the main reason for companies to move to global market is to take advantage of the economies of scope. Economies of scope is that when you produce a variety of goods and with that production of variety of goods, your average total cost is decreased. So that's when you achieve an economies of scope. So with global markets, you can achieve that. Economies of production arise due to the competitiveness index of the country in which the companies produce. Economies of production does not arise due to the competitiveness index. It arises due to when you have upgraded technology or upgraded resources which will reduce your cost of production. That is economies of production. So that's why this one is false and assertion is true. So our correct answer is A is true but R is false. In the next question, it is saying that assertion is acquiring firms often are willing to pay a price higher than the status quo value of assets for the right to control management of target firms. Which means that acquiring firms, so when a firm is investing or acquiring another firm, if they see that they can control the management by paying a price higher than what the firm is valued, then they will be able to pay that price. They will be willing to pay that price. So this one is correct. The value of control stems from the changes that can be made to improve performance by debottlenecking capacity, streamlining and strengthening operations, managerial systems and processes. And this one is saying that control can be managed or can improve your performance if you do the debottlenecking capacity. Debottlenecking capacity is you find the areas of default and change your policies or change your control systems so that you can delete those areas of default or you can improve those areas of default. Okay, so when you pay a higher price for the right of control, with that control you can improve the performance by debottlenecking, by streamlining or strengthening operations or managerial systems. So this one is also true and we can say that this provides the reason of this. So the answer is that both A and R are true and R is the correct explanation of A. Next question is, when is a firm not expected to prefer FDI to licensing? Now in this question it is asking that when FDI is not preferred or when licensing is preferred by the companies, when licensing is preferred. So licensing is preferred when you are ready to share your technology or your technical know-how, right? When you want to enter the new market, that is when you do the licensing and you do not focus on FDI. But we have to identify the conditions when you do not, when you prefer licensing over FDI. So let's see, the firm faces higher transportation cost and tariff. So when a firm is facing higher, let's start with the last option first. The firm's skills and capabilities are difficult to replicate in a foreign market. So if the firm's skills or capabilities are difficult to replicate, that means when they will do the licensing, the country in which they are licensing will not be able to replicate their technology and their product will not be at the best efficiency. So that's why in that way you will go for FDI, where you will have a full control and you can manage or control the production of the product. Second, the firm needs tight control over a foreign entity in order to maximize its market share and earnings in that country. In licensing, you do not have the control in the foreign entity or in the market share, but in the FDI, you have that control, because in the FDI, you are the major shareholders and you can control the share and the earnings in that country. The firm has a valuable know-how that cannot be adequately protected by a contract. So if you think that your particular technology or know-how cannot be protected by a contract and you need to take the control of that, so you go for FDI, because in licensing other people can copy you. So to prevent that, you go for FDI where no one else will know about your technology. Next is the firm faces high transportation cost and tariff. So if the firm is thinking that if they will have FDI, that means they will have the all control, and if they will have all the control, then they will have all the revenues and they will also have to bear all the expenses. So if in that particular country there is high transportation cost and tariffs, then they will prefer licensing, because in licensing, when you provide the license to someone, then they have to bear that cost, and in the case of FDI, you have to bear that cost. So that's why this is the correct option. Next is, in the context of international monetary system, the case for a fixed exchange rate regime claims. Now, fixed exchange rate is when you peg your exchange rate on the basis of another currency, like you peg your exchange rate on dollar or on gold. So that is a fixed exchange rate. Now, in this case, it says that the goods, in the case of fixed exchange rate, the goods and services manufactured in the country become more competitive in international market. And why is that? Because when you have the fixed exchange rate, that means there would not be any inflation, there would not be any fluctuation in the currency. So a lot of people will start manufacturing their products because they know that they will have a fixed income, fixed profit. So because of that, there will be a lot of manufacturers, a lot of investors, and because when there are a lot of investors, then there will be more competition. So because of fixed exchange rate, goods and services become more competitive in international markets. Next is, it is asking that which one of the following is not a part of the current account of a country's balance of payment. Now we know that in balance of payments we have two types of accounts, current account and a capital account. And as the word suggests, current account is for revenue related transactions, and capital account is capital related transactions, we can say, or for the long term transactions. Now in this case, export of goods is a revenue transaction, import of goods is a current account transaction. Investment income is the profits that you earn from the investment, the price changes or the income, interest, dividend that you receive from the investment. So that's why it is a revenue source or current income. And portfolio investment is a long-term investment, so it is a part of capital account, not of current account. So this one is a correct answer because it is not a part of the current account. Now this question is asking theory of international trade promotes. Now as we all know that there is no particular theory of international trade. There are theories that are related, that are for international trade, like absolute advantage theory, Porter's national competitive advantage competitive theory. There are multiple theories, but there is no particular theory that is theory of international trade. So we can say that this question is poorly drafted by the NTA. But if we take it in a general sense, what theories are made of, or what theories promotes for international trade, then we can see that in this one, increase in demand for exportable products, rise in prices and volumes, improvement in quality of products, reduction in prices and increase in quality for consumers. So international trade, what does it do? That it increases demand for exportable products. International trade is for increasing your exports or imports. So it increases demand, rise in prices and volumes. Because of international trade, the main focus is in increasing your exports. And for increasing your exports, there will be rise in volume of the production or in the price of the production. So improvement in quality, it does not focus on quality. Reduction in prices and increase in quality for consumers, it does not focus on that. It is not consumer oriented, it is country economy oriented, and for economy oriented, it focuses on prices and the sale of the product. Okay, so the answer is A and B only. Next is, out of the following, which are IMF facilities available to member countries? IMF facilities, there are three IMF facilities, which are extended fund facilities, structural compensatory financing facility, and standby arrangement. Structural adjustment lending is not IMF facility, and extended fund facility is when the country on to which IMF has given the loan is not able to pay the loan, they extend their payment time period. So that is, they extend their fund. So that is extended fund facility. Compensatory financing facility. Compensatory financing facility is when there is a shortfall, like two countries are dealing with each other. Okay, so one country has to make the payment to country A, has to make the payment to country B, and it is after 3 months. But A needs the money in 2 months only. So there is a shortfall of money. So in that case, country A can go to IMF that after 1 more month, they will receive the money and they will pay back to IMF. So for that 1 month period, A will receive the money from IMF. So that is compensatory financing facility. Standby arrangement is when the country is facing balance of payment deficit. In that case, the country can go for the standby arrangement facility of the IMF. So the correct answer is A, C and D. Next is, which one of the following are types of foreign exchange risk or exposures? We know that there are only 3 types of foreign exchanges. Translation, transaction, and economic. Social exposure is not a type of foreign exchange exposure or risk. Now, translation exposure is, as the word says, translation. And in the case of economy, what do we have to translate? We have to translate the financial statements. So if we translate the financial statements from the currency of a domestic firm, from the foreign currency to domestic currency, the value can change due to foreign exchange rates. Okay, so in that case, that is the foreign exchange risk in translation of foreign financial statements. Transaction exposure is when you sell, when you have an agreement to sell the goods, and within that time period of that agreement, exchange rate changes. Due to that, the risk that you have to face, that is transaction exposure. Economic exposure, when the transaction exposure prolongs for a long period of time, that is economic exposure. Because in that means that economy is facing the exchange rate risk. So that's why it is known as economic exposure. So the correct answer is A, B, and D. So in this question, it is asking that we have to identify the terms related to the organization. So Bali package is related to WTO to assess developing countries in area of trade and capital. So for this, we can identify it with the help of the full form of these organizations. UNCTAD is United Nations Conference of Trade and Development. So from this one, we can identify that it is related to trade. So the answer is B. International Monetary Corporation among member countries. So who provides the monetary corporation? It is the International Monetary Facilities. So IMF provides the monetary corporation, and loans, providing loans for building capital infrastructure of a country, that is World Bank. World Bank provides a loan to the countries. So we can easily identify it. So the answer is this. For A, fourth, B, first, C, second, and D, third. In this question, it is asking that in theory, several levels of economic integration are possible. Arrange the following terms from least to the most integrated. So we have studied regional economic integration. In regional economic integration, at first, the countries go for, first step is for free trade area. Free trade area is the minimum regional integration. In free trade area, countries have the right to trade freely the goods and services among the countries. So the countries that enter in the free trade area can have free flow of goods and services among them. Okay. Then there is customs union. Customs union is, it says that there should be a common tariff that between them, because it is the second step. First step is free trade area. After that, if you go for common tariff for third country or for the third party, then you become customs union. So you will have free trade for flow of goods and services, and then you will have a common tariff for third person. So then it becomes customs union. Then at third, you will become common market. Common market is when with free flow of goods and services, with common tariff for a third person, you also have common, or you can say you also have movement, free movement of factors of production among the countries. Factors of production is the labor and the capital. So if you have free flow of movement of factors of production, then you become common market. Then there is economic union. Economic union is when you have a common currency. When the countries that have entered in the agreement or in the integration of their economies, they also accept a common currency, like in the European Union. That is the most common example. That is the example for the economic union. The European Union have a common currency, that is the euro. For each of the countries that are the part of the European Union, trade in that currency only. Then last is political union. Political union is when the countries in the integration process also have common political parties. Till economic union, each country have their own political parties, have their own elections, have their own president. But in the case of political union, they will have common political party, common political associations. So that is the case of political union. So from least to the most integrated, we can say first is free trade area, B, then customs union, then common market, then economic union, and then political union. So correct answer is this. Next is identify the drivers for increased foreign institutional investment flows in Indian stock markets in recent times. So in recent times, if you have read the news, you are updated with the foreign investments in the Indian stock markets, then you will understand that a lot of institutional investment have inflows in Indian stock market. And why is that? Because given the COVID-19 pandemic, if we see that most of the countries have declined and have a fall in their stock markets, but India is still having a growth in its stock market. So people have, what they have done is that they have moved their investment from foreign markets to Indian market. So the first reason is the COVID-19 pandemic, because it driven liquid, Western capital markets have fallen down. So that's why the liquidity from there has been shifted to Indian markets. Geopolitical supply chain relocations. Now, in recent times, we have heard the news that Apple have shifted its production to India from China. So a lot of relocation, supply chain relocations have also happened in India, so which have increased the stock market value of India. Increased Indian weightage in MSCI Emerging Market Index. So in the market index that compares the stock market values of all the countries, India has increased the weightage, so which has attracted investors. Steep decline in interest rate in large market friendly economies. Our interest rate, so all the other economies have decline in the interest rate, but India is still having an increase in interest rate. So that's why people are investing in our country. Now next is favorable risk reward ratios. Now this can be an option, this can be a part of the reason why people are investing, but this is not a reason, because it is fluctuating. It is not fixed that India will always have a favorable risk reward ratio. It depends on the situation, it depends on the news, it depends on the market situation. So that's why it is not fixed, it is fluctuating. So that's why we cannot say that it is the favorable reason or the fixed reason for inflows. So this is not an answer. So our correct answer is A, B, C and D only. Alright.